What's going on, everybody? Welcome back to another video. In this video, we are going to go over the JP Morgan Equity Premium Income Fund, also known as JEPI. That being said, let's go ahead, cut to the intro, and get right into this video. Okay guys, first thing first, if you would hit that thumbs up button for my channel, it definitely does help and it gets out to more people. If you guys enjoy the content, subscribe. I upload multiple times a week to get you as much free information as I can and give you my honest opinions. I am not a financial advisor, but I am always here to give my opinion. So JEPI, first thing first is I like to do is, you guys been to any of my reviews on stocks, I like to look at the overall performance, the max, and you can get these charts for free on TradingView. I don't recommend trading on them or anything like that, but I do use these for these videos. Right now they're about $54.98, so let's say $55 right now for this stock. They do pay a monthly dividend, and if you look at the yields, you are looking roughly at about 12%, I believe is what they are saying right now. You can pull this up in here and it'll give you so you're actually looking at 8.4. It depends on where you look. Other websites will give you different things. I've heard 12, I've heard 8, I've heard 10. It's hard to do an actual dividend yield per year on this because it's going to change every single month. So that's a key factor here with JEPI that I wanted to talk about. So 39, 35, 36, 33, 29, 35. Again, they're not exactly going to be consistent with the exact amount every single month. And there's a reason for that, though. You guys got to remember what you are investing into. So this stock is a lot like one like QYLD, but it has differences. And I like this one better than something like QYLD. And we're going to go over that here. So JEPI is going to sell out of the money call options. They're running a covered call strategy. And the main thing is what are they running it on? Because you guys know, if you've seen any of my other videos, the wheel strategy is something I love. I run it in my own accounts. I love selling puts, and when I always do it on companies that I want to own. So big thing here is the top 10 holdings here. You're going to see 16.2% of total assets. You got Microsoft, you got Amazon, Progressive. I've never owned Progressive or Intuit. That's just me. But they've got MasterCard, they got Visa. They've got really good companies, and you got Microsoft. I love Microsoft. It has done me very, very well in my lifetime. But besides that, these are all blue chip stocks. That is the main point here, and great businesses. You cannot negotiate that Microsoft's a bad business, because it's not a bad business. It is fantastic. So let's get back to JEPI though. JEPI is going to run a covered call, meaning they own 100 shares. They can sell one contract per 100 shares up here. So I want to give the exact example because not a lot of people understand this. We're going to go to Amazon, and if they own it at this price right here, $151.94, they can sell a covered call up here. And this is the main thing. They can sell a 170 covered call a month out and collect all the premium on it. And if it doesn't hit that 170 price, they continue to hold all the shares and they just keep the income. That is exactly what these funds are made for. And a lot of you guys are going to know that already, and that's why you are here. But just in case, that's one thing I do like to go over. Now, the difference between JEPI and a QYLD, which is just a very important thing, because QYLD is very popular, but I don't love that fund whatsoever. I have owned it in the past, full disclosure, but they do at the money, meaning if you own it at $54.98, they're going to sell it at $55, meaning right at the money. Now, they're going to collect a lot more income, but it's going to cap your upside dramatically. And I think that's something nobody really wants to cap it dramatically. We're okay with capping it a little bit in order to get that extra income. If you're an income investor like me, which you probably are if you clicked on this video, that's something that's important to you. You want your income every single month. Now, my biggest problem with JEPI is that we have downtrended since 2022. And if we're going to compare that to a SPY, that's not really great, because I would rather it run it on the S&P 500 and do just as well. But they don't, and that's 100% fine. We're going to go back to this. So JEPI here is one that you need to really want to do this. Now for me, you are going to pay expenses, a little bit of a higher expense ratio for the actively managed fund. I think that's something that a lot of people look at, but you are going to. So am I going to buy this stock? I'm not going to lie to you. I'm probably not, because I'm active in the market every single day. I'm not a day trader, but I do like to sell options that 45 to 30 days out. Like if you've seen any of my old videos, that is like my base thing. On certain companies, I will do weeklies because I'm trying to get put the stock. That is the big difference there. So JEPI, great company or great fund, I do think, and could end up being very good over time. We don't have enough time, I don't think, to test this and to say, I am convinced 100% I'm going to buy this. Now, this is always you guys' own money. You guys invest it how you want to. I think if we got it maybe down in here in the 45s, which I don't think it's going to go to be honest with you. It's only been down near 50 once, it looks like, if I continue to scroll out since inception. Then I would be maybe looking to pick this up, but I don't love this. If you guys want to get that wheel strategy income though from something and you don't want to do anything at all, this may be the stock for you. Again, the capital appreciation though is my biggest fear on this stock, and you got to understand why. Because my account continues to go up when I fund it and I manage it myself versus I'm paying somebody else to manage it. Now, again, if you are a big, just absolute passive investor and you don't want to do any of it, you don't want to watch the market, you just want them to do it, this is probably a great fund for you if we're being 100% honest. But I want to control my money, and I think this is all up to you on how you want to do it. I love my income. This is an income fund. I do like this. Again, the holdings to me are a good thing. I would choose some other holdings if I'm really looking at it. Intuit, Train Technologies, Accenture PLC Class A, United Health Group. I'm not big into the healthcare sector or things like that. I only do things I know. Microsoft, Amazon. These are ones that you have to make a decision on your own. It's the hardest thing as an investor. I 100% agree. So definitely do more due diligence on this stock. I'm personally not buying it, but again, like I just said, the reason I'm not buying it is for personal reasons, not because I don't think it's a good investment. I don't think that it's a bad investment whatsoever for those looking for income. Again, I think that's the biggest thing here that's going to come out after me, is people are going to be like, it's only an income fund, and so on and so forth. Again, I love that they sell the 5 to 10% out of the money option on things like Amazon, Microsoft, all of those. I do think that that is great. You're not capping your upside, but at the same time, I would just rather do it. Now, QILD, which if you guys have ever looked, which is one of its competitors, I want to go into this one really fast, is much cheaper, and this one sells the at the money option, and you guys can see it has done nothing but just go down. This one's pretty sad, to be honest with you. You can go further. It was up, and yeah, you guys can see the inception in 2014, 2013, and it's done nothing but just absolutely go down. So if I were you and I'm looking at buying this JEPI, I would go find funds that are very, very similar to it and go look at their returns, because there is going to be a lot of similarities in these, and I think people don't understand that. So with that being said, guys, thank you guys for watching the video. I hope that this helps somebody out, and let me know in the comments below if you have any other questions.